whether or not there's a play to shut down parts of the bank that are particularly dangerous or concerning, either from an operational or a regulatory perspective in the short run, but get exposure to the technology and then build back out the banking functionality over time. So I think there are a lot of ways to get creative with the assets there. Again, just taking a very high level approach without knowing what's potentially in there when someone's doing full due diligence.
After FTX's collapse in November, experts warned of contagion or the systemic damage that the crypto exchange's failure could have on the broader sector. The biggest loser after FTX itself may be Silvergate, the California-based bank that established itself as the crypto industry's financial backbone. In this video, we are going to be discussing the crypto bank crash with Seth Gins. Seth is the head of Liquid Investments, a managing partner, and a key member of the Venture Investment Committee. He has 20 years of Wall Street experience and has been deeply involved in the crypto community since his angel investment in Coinbase. Banks rely on customer deposits, which plummeted as Silvergate's central client, FTX, went bankrupt and crypto companies reckoned with the exacerbated bear market. At the time of FTX's collapse, about 90% of the bank's deposit base came from crypto companies. It immediately felt the effect, with the bank suffering from outflows of $8.1 billion in digital asset deposits in the fourth quarter of 2022 alone. By the end of December, its total deposits sat around $6 billion. The bottom fell out on Wednesday when Silvergate announced it would not be able to file its annual report to the Securities and Exchange Commission on time, citing the need to reevaluate its business strategy and its ability to continue. After crypto companies had turned to the bank for years as one of the sole financial partners that would serve the volatile industry, some of the sector's biggest firms announced they were reducing or severing their relationships, including Coinbase, Paxos, Circle, and Crypto.com. Seth also talks about Kraken and its desire to launch it on the bank. He explores what that could mean for Kraken and also the crypto industry. Kraken initially secured the state of Wyoming's approval to form a Special Purpose Depository Institution, SPDI, in 2020. According to the company, Kraken Bank was the first digital asset company in U.S. history to receive a bank charter recognized under federal and state law and will be the first regulated U.S. bank to provide comprehensive deposit-taking, custody, and fiduciary services for digital assets. Let us now get into the video as Seth discusses these arising matters. Make sure to hit the like button, subscribe, and turn on post notifications. Enjoy.
Obviously, the Silvergate network then was used to move funds around 24/7. It was a part of the infrastructure mosaic that was important. I think that component has real value, the connectivity into the crypto ecosystem. So it'll be interesting to see whether a larger bank sees an opportunity to consolidate here with a much more diversified deposit base, where they're not going to be as dependent on what can be quick inflows and outflows associated with the crypto economy.
Well, my guess is that Silvergate's taking their calls right now, if they're
That's right.
If they're being made.
That's right. I think the message that we continue to hear from the traditional finance community writ large, and again, plenty of exceptions out there as well, but generally speaking, there's a view that crypto is here to stay. It's going to be an important growth sector from a technology and innovation perspective. So it would shock me if there wasn't a larger depository institution out there that saw this as an opportunity to very quickly bootstrap connectivity into the crypto ecosystem. That said, there could be a lot of things that we don't know yet. So someone in there doing full due diligence could see things that make them not want to engage until it's in receivership. So I don't have any non-public information. I should be clear on that situation. My guess is if they're going for a federal charter, it could be a difficult environment for that right now. At the same time, I think it's important that those dynamics are tested. So they're probably not going for a federal charter, but again, if they are, what it will do is take that dialogue out into the open. It will bring in the engagement of people in Congress, other regulatory agencies, and I think it will bring together a healthy dialogue around what's important um, at crypto exchanges in order to qualify for a federal banking charter. So I think from our perspective, regulatory clarity is very constructive. That's very much the view that Brian Armstrong has been out over the last few days talking about as well. There's a desire to engage, a desire to have a dialogue, and a desire to get more clarity. And I think what we're seeing right now is some initial pushes by regulators that are going to be met with responses. There are going to be various institutions like Kraken that want to test what those regulatory decisions actually mean, what degrees of latitude they have. And I think all of this helps to define what regulatory environment we're working in. And it helps to mobilize more resources to try to try to get better clarity around how people can operate in crypto. So again, we believe a crypto with a well-defined regulatory regime, one that's thoughtful, is a much larger addressable market.
Crypto companies have already begun to flee from Silvergate, but the downstream effects could just be beginning. Silvergate's exit from the crypto ecosystem and other banks' increasing hesitance to work with the sector will make it harder for crypto firms to get deposit accounts and other critical services. As a result, banking will become more expensive for crypto companies as they explore other options, from credit unions to other types of financial technology companies. Kraken recently reached a $30 million settlement with the Securities and Exchange Commission over its staking program, which it was ordered to shut down, and the U.S. crypto leaders have also accused the government of trying to cut off the crypto industry from the banking industry by putting pressure on banks themselves. Moreover, Castle Island general partner Nick Carter believes the crypto industry is under attack by the U.S. government. In a Substack post he published, Carter claimed that the Biden administration was currently using the banking sector to organize a sophisticated, widespread crackdown against the crypto industry by discouraging banks from doing business with crypto companies. According to Carter, the government's approach replicates a strategy employed by the Obama administration named Operation Choke Point, which sought to marginalize specific industries by restricting their access to banking. Impacted industries included the online poker industry, firearms manufacturers, adult entertainers, lotteries, and money transfer networks. With regards to the crypto space, Carter listed 14 instances in the last 10 weeks in which crypto-friendly banks had faced pressure from the government or had otherwise elected to stop providing services to crypto companies. He claimed that influential members of Congress, the Federal Reserve, the Federal Deposit Insurance Corporation, the Office of the Comptroller of the Currency, and the Department of Justice were implicated in what he called Operation Choke Point 2.0. Notable among these events were statements made by the Fed, the FDIC, the OCC, and the National Economic Council strongly discouraging banks from holding crypto or dealing with crypto clients on a safety and soundness basis. The Fed's rejection of Custodia's application to become a member of the Federal Reserve, the DOJ investigation into Silvergate, and Signature and Metropolitan Commercial Bank's decision to significantly reduce or completely shut down their crypto services were also mentioned. It appears that the entire crypto industry is under heavy attack by the Fed and other regulatory entities who sought to wean out the influency of cryptocurrency in the present economy. But according to experts, this is just a stepping stone for crypto to generate more exposure and adoption. What do you think of Seth Ginn's outlook on the crypto banking system? Let us know your thoughts in the comment section. Also, make sure to hit that like button, subscribe, and turn on post notifications. Thanks for watching.